The S&P clawed back 0.43% Friday and still closed its first losing week since July, and the number that matters next isn't the bounce, it's the 30-year yield that keeps grinding higher into it. I'm Max Sterling. This is your StockStory market ritual, for minutes, the numbers, and what they're hiding. So here's the question going into next week: who actually wins if long-duration yields don't back off? Friday looked like relief, 3 green indices, the VIX exhaling. But this was a summer Friday bounce on light volume, and it wasn't enough to save the week. If the 30-year keeps climbing for a third straight week, every rate-sensitive corner of this market, the utilities, the real estate, the long-duration tech, is trading on borrowed calm. The tape rallied. The pressure underneath it didn't move. Look at what led and you see it. The Dow did the heavy lifting, up 0.98%, value and cyclicals, not growth. The S&P and Nasdaq each managed just 0.43%. That's a rotation, not a melt-up. Materials ran plus 2.14%, healthcare plus 1.29%, consumer discretionary plus 1.15%, economically sensitive money doing the buying. And at the bottom? Utilities, the classic yield proxy, got dumped 2.28%. Energy slipped 0.17%. Real estate flatlined at 0. When bond substitutes lag and cyclicals lead, that's the market telling you rates are the boss. Moderna kept its run going, up 8.86% to $145.13, carrying healthcare a second week. And the VIX melted 5.5% to 15.13, fear priced out, even as the yield story stayed exactly where it was. Which brings me to the one call I logged for today. I said with oil elevated and PCE looming, the VIX holds above 15 and does not melt back under it. Close, 15.13. That's a hit, barely, but a hit, and I'll take the ones that land after the week I've had. Straight talk on the rest, the running record still reads 19 to 26, and I'm not going to pretend a single green check erases it. I've been early, I've been wrong, and I keep logging it anyway. Here's my read. The VIX complacency trade we've tracked for 2 weeks broke Thursday when geopolitics spiked it to 16.01, and Friday it went right back to sleep at 15.13. That's the tell. The fear didn't get resolved, it got ignored. Meanwhile the actual risk, the one Ray Dalio was pounding the table on this week, is sitting in the long bond, not the volatility index. I'm not chasing this bounce. What I'd watch is the relationship between that 30-year yield and the utilities. If yields keep climbing and utilities keep bleeding, the equity rally is running on fumes. Respect the rotation. Don't trust the calm. So here's tomorrow's gradable call: I think this low 15s VIX doesn't hold. With PCE and elevated yields both live, I've got the VIX popping back above 16 before the week is out, and if it doesn't, the complacency crowd was right and I was early again. Logging it. Come back and grade me. Same time tomorrow. Subscribe so the ritual finds you.